Good day, students. Coach Chadwin over here. Just wanted to give you a lesson today on trading psychology. Wanted to show you a couple of key points that you're going to want to look to in terms of understanding why trading is such a unique skill that you need. I'm also going to illuminate you to some of the things that the banks have been hiding away from you, things that we are not supposed to know. And if you like that or enjoy that, please leave a comment below and also make sure that you subscribe. However, we're going to take you through some trading psychology and we're going to take you through some things you should know but you don't know at the moment, right? So, with that being said, let's jump right in. Let's get to the slides. Let's have a look. Okay, trading psychology 101. It is said that trading is 90% of trading is psychology. 90% of trading is psychology and 10% is skill. So one of the things that we see quite often is that people chase the skill, which they should and rightfully should try and attempt to get correctly. However, they're not focusing on the psychology. So we want to correct that today by giving you a couple of things that makes you think differently about actual trading. You see, if you don't know any better, how can you respond any better, right? Okay, key points that you have to remember in order to be successful is trading is a skill. It is a skill. In other words, you got to get better at it over a period of time. For instance, when someone becomes a carpenter, on their first day, they're not actually a carpenter. It takes some time before they develop that skill effectively, before they can be trusted with some of the bigger jobs, right? Trading is not gambling. Now, you might think that this goes without saying. However, you'll be surprised how many people get into the gambling mindset when they actually try and trade. Number three, trading is not a get rich quick scheme. The attempt here to get rich is noble and it is good. However, it is not the kind of thing you want to be looking at as a short term, quick, overnight kind of perspective. But longevity is important. I cannot tell you how many people we see that come into the industry that starts off, goes, makes tons of money, and then just loses it all very soon thereafter. Trading must be respected. This is also important. You got to make it your duty to understand that this is not something you want to be wasting your time on or your money on. And if you don't give trading respect, you're going to find that trading will take all that you have. One trade should not define you. Oftentimes, people are overcome by one major loss or they are overcome by one major win. Either is bad. You might assume that winning is better than losing, but more often than not, statistics show that after someone has had a windfall, a massive win, they tend to give up everything, right? So one trade should not define you. Number two, trading is a business, and if you treat it like one, it will treat you like one. So let me make an example. When you are running a business, for instance, your duty is to buy some items at a low price and then sell them at a higher price. And you gotta look at your business in that particular way. Even in trading, you gotta understand that your duty is to take the little you have and maximize that. What you don't want to do is be over leveraging and over risking. And I'm going to get into this a little later, but I'm going to show you how a little bit of risk with proper risk management can go a phenomenal way. Trading is about probabilities. In other words, there are going to be times that you are wrong and you're going to have to deal with it and understand that even though you are wrong, the next trade might be right. In fact, there might be times where you get a series of wrong trades, but whether or not you can weather that storm is all related to your psychology. So let's move on. Did you know the following? I need you to ask yourself why you do not. Now, it's not specifically on this slide, but we'll get into the next few slides and explain something very significant. Ask yourself, why don't you know this? So I'm looking at a slide that I took off the internet from JP Morgan and Chase. And this shows that the highest interest rate recently has been 6.25%. Regardless of what country you are in, I want you to go and check what your highest interest rate recently was. Right? This is obviously from JP Morgan and Chase. And so we're looking at the effective date, that is the 9th 22 2022, right? And 6.25%. That's the highest recently. Keep that in mind. That's the interest rate, right? Slow and steady wins the race, they say, right? Question mark. Does it really? Let's look at what is called the rule of 72. It is a formula that is popularly used to estimate the number of years required to double the invested money at a given annual rate of return. So the number you saw before this on the previous slide is 6.25%, and that's the annual rate of return. And so if we take those kind of numbers into consideration using the financial tool called the rule of 72, we can have a look and understand how long it will take to double your money. And I think you're going to be surprised at how long it will take. Let's look at this. What is the rule of 72? This is what the big banks don't want you to know. The rule of 72 is a quick, useful formula that is popularly used to estimate the number of years required to double invested money at a given annual rate. Alternatively, it can also compute the annual rate of compounded return from an investment given how many years it will take to double that investment. So basically, in simple terms, all this does is it decides for you how long it's going to take for your money to double, right? How long will it take for your money to double? Okay, so let's move on to the next. How do you calculate the rule of 72? Well, you calculate it like this. Here's how it works. The rule of 72 works. You take the number 72 and divide it by the investment's projected annual return. The result is the number of years approximately it will take to double your money. For example, if your investment scheme promises 8%, now we've seen JP Morgan at Chase says 6.25, at an annual compounded rate of return, it will take approximately, listen to this, 9 years to double invested money. 9 years. Did you know that? A lot of people are being lured into these saving schemes that says, you know what, save your money, save your money, save your money. The problem that with that is by the time your money is actually doubled in terms of savings, what your money is worth because of inflation is far less. So you'll actually be losing money, not doubling your money. Note that the compound annual rate of is 8% and is plugged into this equation as 8 and not 0.88, giving a result of 9 years and not 900, right? If it takes 9 years to double an investment, $1,000 investment, then the investment will grow to 2,000 in year 9 and 4,000 in year 18 and 8,000 in year 27 and so on. So as you can see, this is not exponential growth. Even with the magic of compound interest, it's still going to take you at least 9 years to double your savings, provided that you have provided that you have an 8% interest rate, which is very rare at the moment as well. I'm sure you'll agree, right? Strategic growth. Consider the risk of not learning the skill. So what am I telling you today? Consider what it costs you actually by not learning how to trade and not learning how to leverage your money. So let's crunch the numbers. On average, it will take you 9 years to double $1,000 based on an 8% annual return. Now, let's say you grew your trading account by 1% per day. How long would it actually take you to double that money? Well, starting with $1,000, using the rule of 72, it will take you approximately 72 days. But what if we grew it even at less than 1% per day? What if we did 0.5% per day? Well, then it will take you plus minus 140 days to double your money. I don't know about you, but that sounds way better than 9 years. It's not hard, as we've been taught to believe, to make money. It's not hard as we've been taught to believe, right? To make money. So 72 days or 140 days, and that's just at 1% or 0.5% per day. Think about how different that is to double your money over 9 years. So this is the risk you're actually giving up by not learning a skill. You're putting your investments, you're putting your financial security in the future all in the hands of someone that's clearly trying to scam us all, because nobody gets told, listen, save your money with us. It will take you 9 years to make some money. What win rate do you need to be successful in trading? Because this is something that people are often saying, incorrectly or often have a incorrect perspective of. So what win rate do you actually need to be successful in trading? And what number do you think you need to be successful? So right now, just pause the video right here. And what I want you to do is just write down a win rate, a percentage that you think a winning trader needs to be successful. I want you to write that down, and I'm going to show you the actual numbers, right? But I want you to write it down. Take a moment right now and write it down. Okay? I'm giving you that moment. Okay. Here we go. Okay. Let's move on. Here are the actual numbers, right? Here are the actual numbers. I want you to see this. This is a series of trades. So I want you to zoom in on your video if you can, and you want to look at this. This is the actual numbers done. We've done the risk assessment. I've done a risk assessment on this and seen what it would take and what kind of win rate you would need to make some profit. Now look at this, right? On the left, and I'm explaining this, it says at a 33% win rate. Most people think that you need 50. Most people think that you need 70. But at a 33% win rate, right? In other words, only 33% of the trades that you are taking, you're actually winning. Look at this. After about 32 trades, with a random selection of wins and losses, as you can see over here, sometimes you get more losses after each other, right? But it's a random, absolutely randomly selected set of trades. If you were to risk 0.25% after about 30 days, right, you'd come out with 5.75%. That's 30 days with losing most of your trades, provided that you trade for a 1-to-4 minimum risk reward ratio, you are gaining 5.75%, right? And then at 33 or 0.33 risk per trade, also a random generated wins and losses, right? Over a period of 30 days, if you're taking one trade a day or 30 trades or 32 trades, you'd be up 7.59%. So just in 30 days, you're beating the bank, right? And then at a 0.5 risk percentage, what happens when you have random wins and losses to the result of 33% success rate? You end up with 11.5%, right, over that period of time. Now, at the end here, we've got something else. At the end, we've got another random generated set of trades. However, this is a dynamic risk profile. So this is something we teach our students as well. What happens if after you lose one trade, you reduce your risk, and then after you win one trade, you up your risk again? In short, you still end up with 9% profitability, and that's just in 32 days or 32 trades, provided you only win 33% of your trades. Now, this particular chart on the right is exactly the same as the first one. The only difference is we noted that in our actual crunching of the numbers, in this particular set of randomly generated wins and losses, it generated all these losses after each other. Look at this: 1, 2, 3, 4, 5, 6, 7, 8, 9. That's 9 losses in a row after each other, and still you ended up with 11 point, and that's why it's highlighted in red. It's not negative, just highlighted. Still, you ended up with 11.5% win rate. So I don't know about you, but these are the kind of things you need to know in order to effectively decide whether or not trading is for you. So is trading hard? Yes, but the question needs to be asked, is it actually harder to make money by saving than by trading? I think the answer is by saving, because it would take you 9 years to make what you can do, provided you use risk management, proper risk management, and you have a decent enough strategy. You will be able to do that in months, not years. And then again, you're still submitting to the magic of compound interest. So what happens when you extrapolate that across multiple months over multiple years? It just gets better and better. So I wanted to just come on today and kind of like show you that as well. And this was a third sample set again, and we were kind of just looking at what it looks like if you win and lose over that period of time again and again, the numbers end up being the same, right? You win. That's it. You just keep winning, provided that you use proper risk management. Now, this section I'm not going to go into now, but for the students on YouTube, you won't get this. I suggest you hit us up on via email, but I wanted to share this. There are three areas, right? Three areas on a chart. When looking at higher time frame zones, there are three high probability zones you should pay attention to. We call this the three areas of value. So if you'd like to know more and you'd like to get connected with us, please drop us an email or go to our website, which is kingdomdaytraders.com. Kingdomdaytraders.com. And I think you're going to find tremendous amount of value. Set up a call with us. Let us show you what we are about. But we just wanted to share with you today what we kind of teach our students. What is this about psychology today? What is the summary of everything that you've heard here today? Well, the summary is simply this. You need to understand the numbers. You need to understand that trading is actually in your favor, not against you. And that saving, just the normal way of saving, is not really going to make money. In fact, you have a better chance of risking your money in the stock market than you have in actually trying to save it in a savings account, because the amount of time it will take you, you're actually not gaining money but losing it instead, because of the magic, so to say, in quotes, of inflation. And as you guys know, that's rampant and running away at the moment in many different countries. So you want to protect yourself against that. You want to hedge your bets. And so one of the things you can do with that is learn the skill of trading. With that being said, it's been Coach Chadwin. Just wanted to drop some gems with you guys today in this video. Hope you guys find it valuable. Remember to like, to comment, and subscribe. And also just connect with us. Make sure that you get connected. Go to kingdomdaytraders.com. Please book a call with us. No obligation call. And we're going to just have a look into that and see what we can do and help you. Also, we have a lot of free stuff available. We got a book available. We've got some other things available. So if you take the time to hit us up, we'll get that over to you. Just ask it in the email as well after you get that call with us, right? So have a good day. Be blessed on purpose, mindset, multiplication, and management. Has been Coach Chadwin.